Hello everybody, welcome back to another value investing video with Tyler. And over the weekend, we got some big news that Warren Buffett sold nearly half of its stake in Apple stock. So today, I decided to take it into my own hands to decide whether or not you should buy or sell Apple. And today is August 5th, 2024. The markets in the morning were down over 6% amid the news over the weekend. So let's take a look at Apple. Firstly, we're going to look at Apple's revenue growth over the past 15 years. It is important to look at a company's revenue growth to show the total amount of money a company brings in from its operations. As we can see in this chart, Apple's revenue growth over the past 15 years has been very well at an about 14% year-over-year average growth rate. However, in the chart, you can also see that it has become stagnant in the past few years. This has worried investors of the future of Apple's revenue growth. Now we're going to take a look at Apple's EPS growth over the past 15 years. And as we can see, it has been a lot better due to buybacks of shares and increasing margins, allowing for Apple to get a greater net income growth. Now we're going to take a look at Apple's shares outstanding. We want these to be going down in Apple buying back shares. As we can see, Apple has been buying back at a very fast rate at about 5% in the past 15 years. We want them to buy back because you'll own more of the company. For example, if you have a slice of pizza and it's split into 10 slices, you'll own 10% if you own one slice. However, if they buy back and then they only have 4 slices left of one pizza, then you'll own one slice. However, you own 25% of this pizza. So then if a company does this, you'll own more of the company. Now we're going to do one of the most important aspects of whether Apple is a buy or sell today. We're going to value this company. First, we're going to look at the revenue growth of Apple. We are going to put a 10% revenue growth rate because analysts expect them to do about 10% in the next 5 years. Next, we're going to go down to net profit margin. We're going to set our net profit margin to about 25% because over the past 10 years, Apple has averaged about a 25% net profit margin. Next, we're going to put their cash conversion to leave it at about 100% since that's about where it has been. Finally, we're going to look at our terminal PE ratio. This is the price to earnings of the stock to earnings per share. So I'm going to put this at about a 25 PE because the average of the stock market is 15 and Apple is a faster and a bigger moat company. So I think it deserves a premium to the market. Finally, we're going to look at our discount rate of 12% so we can have a margin of safety compared to the stock market. As we can see, our fair value for Apple is about $188. So it is about 17% the recent price. So based on this, I believe that Warren Buffett may have been in the right or wrong. We don't really know why he sold, but maybe it was because tax reasons, or maybe because he just doesn't believe in the company anymore. But all you can do is focus on yourself and decide whether or not you should invest. This is not financial advice, so do as you wish and do your own research before buying or selling any company. So this will be it for us. Thank you for watching this video about Apple stock. See you next time.